Hello everybody, it's Chris Nguyen from W3 Real Estate Investing again. I'm coming to you from Vancouver today to talk about the Calgary market report on our Hey, Did You Know YouTube series. Right. So I'm going to go through it one by one. I give you some quick introductions, what to expect today. Number one, we're going to get into an introduction of the Calgary real estate market. Right. And then number two, I'm going to go through some data for homeowners and residential investors. And I'm going to go through some data for apartment building and cash flow investors. Right. And then I'm going to share with you what I think are the best strategies for the Calgary real estate market today, and what do I personally think about the real estate market, the Calgary real estate market. Okay, so first of all, let's go over some introductions, right? Where's Calgary? What is in Calgary? And why people invest in Calgary, sort of things. Okay, now Calgary has a population of 1.6 million people, which is about 8.79% increase since 2018, right? And median income for a family is about $104,533. And 33.3% of the populations are immigrants, which mean they were born outside of Canada, right? Now, before we continue, I just want to share my thoughts very quickly here. A population of 1.6 million make Calgary one of the major cities in Canada, right? And that's why there's so much buzz and so much activities happening in Calgary in the last couple of years. And median family income of $104,000 is actually quite high as well. So Calgary, you would consider it to be one of the top markets, population and income wise, right? And you also get a lot of immigrants coming from all over the place, right? You got Filipino, Chinese, Vietnamese, people from other places. So I only mentioned the Asians because I know more of that. And how to qualify immigrants are people who born outside of Canada, right? So this is actually a very busy and major market. Now, let's talk about their economy. Okay. Oil and gas is still the number one most major industry in Calgary. However, they have learned from previous market corrections and past mistakes, and they try not to be too dependent on oil and gas, because when something happens to the markets, it will create a huge problem or a huge correction for that market if you depend on only one industry, right? That's why they now diversify out to scientific and technical industry, and also a lot of constructions are going on, right? And there's many major head office for a lot of tech companies, science companies, right? And a lot of constructions of new homes, new buildings are happening in Calgary now. So they, as you see, they still very much dominated by oil and gas, but they slowly transition into a more stable market conditions where they have multiple different major industries. So that's good news to hear. Now, let's go over some breakdown of the benchmark price per locations. Okay, benchmark price means the price that got sold at the most. That's what benchmark means, right? Not average, where we got all the numbers and divided. This is benchmark, which is the most. Okay, so in Calgary West, you would be looking at $643,000 in benchmark price. In Calgary Southeast, you will see a little lower price at $515,000. Right? In City Center, you'll be looking at $570,000. And then in Calgary East, it's actually the lower one, which is $333,000. And then there's the other three that you can see on the screen here. Now, what does this all mean? It doesn't mean that in these markets or in this part of the city, the more expensive it is, the better the place, the better the neighborhood, right? It's not necessarily, because for example, if in Calgary East, even though the price is lower, but if there's a lot of new construction for apartment buildings, apartment units, and townhomes happening there, a lot of them are being sold, then the number would show up as that area has the this price mark, that is price mark, so benchmark, which is lower than the rest of the market, right? And same with Calgary Northeast. Might seem to be lower price, doesn't mean it's a bad area. It could mean homes there could be smaller or different type of home or properties. That's why you sell at a lower price. Okay, so seeing this, my thought process is that Calgary has actually surpassed Edmonton in terms of popularity and in terms of pricing. Right, as you see, Calgary price is significantly higher than Edmonton, right? And there's more expensive luxury home. There's a lot more activity for land developments happening there. Okay, so this market has now, I guess, the prices has been increasing. Okay, and you see more surprises coming now, because on the next page, you will see that all, like this is amazing, all residential properties, single, detached, semi-detached, townhome, condos went up significantly, over 10% in most cases, except condo went up by 3.2%. Everything else went up by 14.8%, 10%, 9% compared to last year in October. That means the market corrections, the interest increase actually does affect Calgary, but not at the significant level like Vancouver and Toronto and major markets are seeing, right? And so like 14.8% for a single family home. This actually shows us that homeowners are moving there for work, for lifestyle, for better price home, better options. This is not just investor coming into the market, right? Actual homeowners are buying the properties. Okay, so the market is very strong. And you also notice units sold went down and new listing also went down. So that means, a couple weeks ago, a friend of mine, Vinod, and I was talking that, and he was sharing that in Calgary, prices hasn't dropped, actually went up, 14%, but it takes a little longer to sell, which makes sense now because units sold actually went down. Right? So number of sales went down, but prices went up. It's very interesting. Okay, so that was for our residential or homeowners data. Now let's talk about if you were an apartment building investor or if you invest for cash flow. Right? So you will see that on average, if it's a 10 units or higher apartment building, you're looking at $160,000 to $180,000 price per door. Depends on locations, conditions, vacancy, and number of units, right? And on average, it takes about 120 to 160 days for these properties to sell. If you have 10 units or less, you're actually going around $200,000 to $280,000 of price per door. Same thing, depends on location, conditions, and currency. And day on market is only 30 to 50 days. Right? What this number is telling me is that there was a great, which was very good for Calgary investors this last couple of years, maybe more than that, that prices are going up, which is very, very good. Right? But for investors who are looking to enter the market, you probably want to be a little more cautious and do your calculations, right? Because when it gets to over $100,000 per door per unit, your chances of cash flow becomes lower. Right? This is now somewhat becoming the market appreciation game. We'll go over more details in a bit. So rent I will share with you here. Vacancy and cap rate I share with you, but cap rate between 4.7 to 5.5% actually make the Calgary markets pricing becomes a little, a little pricey now, right? So you really have to think about your strategy when you go into this market, right? Know your goals, know your personal budget, and know why you're investing to make sure before you enter the market, right? Not just, read the news and, oh, Calgary looks great, and then jump into it. It's not for every strategy. Okay, so on the next page here, let's talk about that. So what I'm seeing is, even in today's tough market, prices still went up. That means market appreciation is staying strong, given it's only a year or two. But moving forward, as our market correction goes down, and as our inflation recovers and interest rate goes down, this market, from my estimation, will continue to go up. Not sure by how much. You have to do the math on that, but it will continue to go up. So it makes perfect sense to fix and flip in this market, do land development, because in a year or two, your land development project will appreciate, and you would end up making more money. Wholesaling is great here. Pre-sales are great because we always know prices will go up, right? Buy and hold is great. Buy something, if it breaks even or cash flow a little bit, but you get the market appreciation, right? And JV partnership makes sense in this market because you're going to share equity. So it makes sense to bring a second person in, share and enjoy the equity appreciation. Now, what I wouldn't do as an investor, I probably wouldn't look in for cash flow in this market, right? As you've seen, the number doesn't work. Looking at the rent and the price per door, you probably want cash flow or cash flow as much, right? I probably wouldn't rely on rentals here too much. I probably wouldn't BRRRR, because in order for BRRRR to work, you have to be able to rent the property at a decent price, decent amount compared to the price of the property, right? And I don't know. I don't think I would private land here. I would JV instead, because for private land to work, usually your project manager or the buyer would need to pay a monthly interest payment, right? But if there's low rent, low cash flow, it's going to be tough. But a big payout at the end is great. That's why equity partner, JV partner makes perfect sense here. Okay, so what do I think about this? Personally, as an investor, as an investor, I most likely will not invest in this market, right? Because I'm a cash flow guy, right? I'm a cash flow guy. I'm a private lending guy. I'm a BRRRR guy. But if you're a flipper, or if your strategies rely on market appreciation, Calgary seems to be a great place to be in. The price is still not too expensive yet, like most major markets. But there's still a lot of potential, 10, 15% market appreciation on your single family home is a great number. And it's only $600,000, $700,000 compared to Vancouver, Toronto. This is still very, very decent, right? Land development is great here. If you know what you're doing, it's gonna look like it's gonna be a big payday, right? But again, these are all advice and suggestions based on the time that I looked at the market. If you will look further, when you look at specific deals, you would find out a lot more information, and that would help you for your analysis, right? And I want to also go back and also look at the vacancy rate. Another thing why I don't support cash flow or rental here in the Calgary, not here, but in the Calgary market, is because vacancy of average 4.9% is still somewhat quite high, and this is average. That means there's some area that is much higher, right? In some areas it's much lower, right? Also, your rent versus your price per door is quite a difference, a very off ratio, right? And if you end up owning stuff that is under 10 units, then you will be paying over $200,000 price per door. And usually that will be 2 bedrooms, 1 bedroom, studio, even 3 bedrooms. Your rent wouldn't go high enough to cover your expense, your mortgage payments, their servicing. So it's a tough, very tough market to cash flow in and to BRRRR in. Right? And having private lenders, if you don't have the cash flow, make life very difficult. So that's why personally, I would not get to this market unless I decided to do flips and flips or pre-sales, right? But if me, I would go to other market where there's better cash flow. But again, every market requires a different strategy, right? So it's important you know what you're looking for, you know what your goal is, so that you can choose the right market. Anyways, thank you so much for watching, and peace.